Welcome to the ARMR Report. It's Monday, April 15th. Thanks for being with me. Quick notes. ARMR stands for Algorithmic Risk Management Research. Everything I'm going to share with you today, and I share every day, is information directly off my trading desk, information I use to manage my own equity portfolio and that of investors we work with. This is an educational show. I'm not telling you what to do. I couldn't possibly tell you what stocks to buy in your portfolio. I don't know you. I couldn't advise you on risk because I don't know your risk tolerance, okay, or what your asset base looks like. If you want me to do that for you, we'd have to chat. Feel free to go to my website, rosenthalcapital.com, get the phone number off there, give me a call. I'd be more than happy to sit down with you and see if we're the right fit for each other. Having said that safe harbor agreement, if you will, let's go into today's activities. We're going to go over the algorithms that we use to manage our assets from a risk standpoint. Every day we get on our desk, every day I talk to you via the podcast or the webcast. I'm trying to get us on the right side of probability and statistics, and I'm trying to attack investments with the greatest reward versus the risk that we're taking. So I'm going to go over first the algorithms, where they are, why we're risk on right now, if anything's changed. And then we're going to drill down into the cannabis space. This is our favorite investment space. You all know this. We've been talking about it ad nauseum since really August of last year when Constellation Brands took their $4 billion stake, total $5 billion, in cannabis growth. That was the watershed event. Then we had the Farm Bill, another watershed event for the first time farmers can farm hemp since the 1930s. We are going to discuss the APHA earnings announcement. APHA is the symbol, APHA. You've never heard me talk about that stock on this show, and this is the reason why. Earnings came out, stock is down big. I'm going to go over why we avoid those type of stocks. Okay. Let's jump right in hip deep. This is a 15-minute show. I'm going to keep it brief. Try to be a little tighter in these shows, make it easier for you to gather the information and move on. And of course, this is a live trading desk. So I've got a lot of things I'm working on today, and I'm just taking some time out of my day to talk to you guys and help you out. And thank you for being here for me. It always keeps me honest, makes me execute correctly. Okay. Algorithms, risk on across the board. That hasn't changed. I love weakness in the beginning of the week, like last week. Monday, Tuesday, the market's weak, kind of bottoms out Wednesday, has a rally, Thursday, and Friday closes strong. That is classic bull market action. So Monday morning weakness means absolutely nothing from a negative standpoint for us or our algorithms. It's exactly what we're looking for. Markets seem to be closing gaps, which is classic in an uptrend. Gapped up. Now we're coming down, closing the gap. Find support at those levels. Start marching higher again. If we get to the end of the week and we're having big sell-offs, that's the problem. Okay? So nothing's changed there. Before I get into APHA and what these cannabis stocks are doing. Of course, they've been selling off the last couple of weeks. Totally classic, by the way, sell-off. I'll get into that in a minute. Let me explain a little bit more when I say I try to make investments where the reward is worth the risk. Investing in stocks carries risk, guys. You can lose a part or all of your investment. I don't care what stock it is. I don't care what stock it is. Let me ask you a question. For all of you out there, for all the people who own General Electric at 50, now the stock's 5, do you feel any better because you own a name like GE? Or did you lose the same amount of money as somebody who bought a pink sheet stock? Right? Losing money is losing money. I don't care what the investment name is. And you can think you've got safety in a big name, but you don't. The big name stumbles and you can get wiped out just as fast. And sometimes it's even worse because it's hard for you to cut your losses because you keep saying to yourself, well, Well, it's GE. Well, it's GE. It always goes up. GE over time, I'll be okay. Investing doesn't work like that, guys. Get yourself on the right side of probability and statistic and put money where the reward can be worth the risk. What possible reward could you get out of owning General Electric? What were you looking for? 7% return on average over the next 10 years, which is basically stock market returns. So the reward was small, and obviously your risk was just as great as owning any other stock. Okay? So let's focus our investment strategy where the reward's huge and we know the risk is relatively the same, right? We're going to cut our losses at a certain point on every investment. So we can quantify what our loss can be. So let's focus where the gain can be enormous. It's just common sense, but most people, financial advisors, most people who learn these type of things and the ridiculous courses they teach in college, they don't teach any common sense. And so if you're going to hide money in big cap names that you think are safe, then I suggest that you just hide money in ETFs of the big indexes, right? At least you won't walk into a brick wall like GE, but you're going to get the same performance as GE. Maybe better, in this case, a lot better. You follow me? So that's why we're focusing on the cannabis space. The reward can be enormous if we're right, and we have to manage our risk as we go, okay? So always risk of loss when you're investing. Can't get over your skis. Can't fall in love with an idea and throw all the money to work. Doesn't work like that. You have to buy weakness, sell some into strength, and recycle holding a core. That's the best way over a long period of time to manage risk, in my experience. Let's get to APHA. On this show and on every show since August, I've been talking about how we prefer to invest in businesses where there's a high barrier to entry, in cannabis businesses where they're building intellectual property. I don't want to buy a grower just because it's a grower. I want to buy a grower that has a joint venture relationship perhaps with, I don't know, Molson Canadian, okay, like Hexo. I'd rather put money there. They grow, they have a joint venture, they're working on intellectual property. I'd rather put money in Canopy, right? They grow, they have intellectual property, they're working with Constellation Brands, they have a war chest of capital. I don't want to just put money in cannabis because they grow. Bruce Linton, the CEO of Canopy Growth, said it best. Think of cannabis like you would have thought of the sugarcane business the end of the 1800s and 19th century, turn of, okay? Guys who grew sugarcane, a lot of them went out of business because it became a commodity. Not a good long-term investment. Guys who extracted sugar from the sugarcane, that worked for a while. They put sugar in a bag, sold it on, in the supermarkets. That worked for a while, but there was no barrier to entry, no real intellectual property. That became commoditized. Then there was a company that figured out, let's put sugar in a carbonated beverage. Let's have intellectual property around the recipe, and we'll put it in a vault in Atlanta, Georgia, and we'll sell it with ridiculously high margins. That stock has been paying investors for decades. Of course, that stock's Coca-Cola. This is no different. The cannabis business is no different. It's a crop like any other crop. You have to high grade your investments, guys, in this business. Look for war chests of capital, look for intellectual property. And then what you want to do is buy weakness. And that's the beauty of APHA announcing earnings, and it disappoints the street. I'll get to that in a minute, but because I put disappointing like this because it's absurd. The street is going to get this wrong all the way up. It's like they got internet stocks wrong all the way up. Okay, the street's always behind when you're at the beginning of an investment super cycle. And in the first couple of quarters of announcements of earnings, these stocks run up into the announcements, all this excitement. They can't possibly deliver yet. The business is just beginning to develop. There are going to be fits and starts. There's going to be bumps along the road. Right now, there's not enough flower and dispensaries to match the demand in Canada. So these companies are announcing earnings that can't possibly make analyst estimates. So they downgraded. They downgraded Canopy last week. I think it was Scotiabank. Great. Canopy doesn't announce again, I think, until, is it June, guys? I think it's June. Brilliant. Bring that stock down right into my basket. Buy weakness, sell strength. Some weaknesses you want to buy, others you want to be afraid of, okay? If there was, let's pretend Attorney General Barr came out and said, we're going to be vigilant prosecuting every case that has to do with marijuana in the United States of America. That would be a problem. I wouldn't be running out there buying cannabis. I'd sit back and say, oh, let's see what happens with that story. But if the stocks sell off because earnings don't meet expectations yet, that's a gift. And particularly when they rock a stock like APHA, which is a stock we don't want to own anyway. So they bring down the whole group. We look for the best names in the group. We build our positions. And you don't have to be buying in the midst of the selling today. Let it sell off. Let it sell off. And then when it sets up again, you put capital to work. We use our algorithms to help us do that. Let it sell off. I'm not in there running. I'm not telling you to do anything, right? This is an educational show. I couldn't possibly tell you how to run your own portfolio. How many times do I have to say that, guys? But what we'll do on our trading desk is let this wash out, let this disappointment wash out. And then when they start to set up again, that's when we'll start putting capital to work. Okay? So just want to wrap up today with those thoughts for you. I feel like there's something else on my mind. I can't remember what it was. So we'll just have to save it for next time. Give me a minute. No, I can't think of anything else right now. That's it. I will give you a shout out, give myself a shout out. Tomorrow night, 6 o'clock, Palm Beach Gardens Library, I will be holding a cannabis investing symposium. I'd love for you guys who are living in Jupiter, Palm Beach Gardens, Palm Beach, Boca, come on up, sit down, throw questions at me. I'll be doing a Q&A. It'll kind of be like a town hall meeting. Okay? I look forward to seeing you guys there if you can make it, and I'll be probably back at you tomorrow if time permits with another update. Okay? Take care, guys. Thanks for being here. Have a safe day of trading. Be smart. Look to buy weakness. Look to sell into strength. Get yourself on the right side of probabilities and statistics, and focus on ideas where the reward is worth the risk. Take care.